Welcome to Follow the Money. Let's kick off today's show with the big story from Nigeria's capital market. Market rebound. NGX sparks towards 106,000 points. All share index wrapped up the week. Ended April 25. We know that there was no market on Monday last week because of the Easter holiday. On a strong positive note, climbing 1,518.8 points to close at 105.752.61, edging closer to what we're expecting, the 106,000 mark. That constitutes a weekly gain of 1.46%, fueled by bullish rallies in consumer goods, insurance, and banking stocks. With results coming out, more and more results coming out, you can see the market bouncing back and getting what it requires towards hitting the 106,000 mark. Market volume surged 21.6% to 1.85 billion shares traded. Market capitalization jumped back above 66 trillion, rising to 66.4 trillion. 64 equities gained value, a big jump from 31 the previous week, and 27 equities declined compared to 44 losers the week before. Remember, there was only 4 trading days in the week before. What were the major sector highlights? Consumer goods led the charge, went up by 8.65%, driven by international breweries, which is a stock that Ugo has always been talking about. Vitafoam and Cadbury. Cadbury seems to be coming back to life, especially following the restructuring they've been doing. And I remember in one of the other shows on Nairametrics TV, in good company, we did look at Cadbury and Lever Brothers, and we saw the changes that the consumer goods sector has been making. Insurance stocks jumped 7.3%. Banking stocks gained 5.06%, with strong move from Jais Bank, UBA, Access Corp, and Zenith Bank. Remember, the results of the banks have been streaming in with huge improvements and great results coming out of the banking sector. The industrial goods lagged down 3.44% thanks to a sharp dip in Dangote cement, and oil and gas slipped marginally by 0.07% during last week's trading. Who were the top gainers of the week? At the top was International Breweries, which gained 40%, NASCON Allied Industries 26.22%, African Prudential PSC 25.64%, Vitafoam 21.22%, and Ikeja Hotels 21%. Ikeja Hotels have been doing rather well. They've continually improved. Last year they were among some of the penny stocks that we always talk about that grew significantly, and they've continued that this year. Let's see how it goes till the end of the second quarter. Top losers of the week: VFD Group lost 82.19%. Wow, that was a huge loss for the VFD Group. John Holt PSC 18.6%, Dangote Cement 10%, MRS Oil Nigeria 9.95%, and Total Energies went down 5.53%. What are the corporate announcements that came out last week? UBA, Access Holding, Lafarge Africa, Transcorp, and Ikeja Hotel all released fresh quarterly audited reports during that period. As you know, first quarter results are beginning to come out, and a number of the organizations are beginning to bring them out so that we can see how they are performing. Follow us on our website and also on other shows where we'll be looking at some of these quarterly results and tell you, bring you greater insights and tell you how the companies are doing and how they fared in comparison to their annual reports that came out and the audited results. What are the market outlooks for this week? The NGX, we know, is rebuilding momentum, buoyed by mid and large cap stocks with strong buying interest in consumer goods. We've seen consumer goods continually bounce back after all the the difficulties they've had in 2023, 2024 due to FX related issues. They've really bounced back in 2024, and 2025 they are growing stronger and stronger. And banking also has remained consistently strong. What have the banks been doing? They've just released most of their results, and you can see the growth in many of the information that has been provided. Profits have soared, balance sheets are growing, and more banks are looking towards 2026, where the banking capitalization deadline will come into play. So we expect to see more and more banks coming out again later on this year or during the year to see how they're going to raise that capital. Remember, for the big banks, tier 1 banks is 500 billion, tier 2 banks is 200 billion, and so on. So market capitalization we see for the banking sector is continually growing. Let's say what they do with reaching that capital requirement as provided by CBN. That's your market roundup on Follow the Money. Stay tuned. We've got more money moves coming up. With audited accounts and financial and annual statements coming out, we have seen more and more of what has happened at the end of 2024 with organizations releasing their audited accounts. We dive into one of investors' favorite topics, dividends. And who doesn't like the dividends? So that's one of the reasons why investors put money in a number of those companies. So at the end of the day, they can get some returns back. And how Nigerian companies have rewarded shareholders in 2024. With dividend payouts, is a tale of two sectors. Manufacturers led the way with sky-high payout ratios. It's been long since the manufacturing sector paid out, dividends as high as what we're seeing today. But it seems to me that 2024 was a good year for the manufacturing sector. Banks, on the other hand, took a more cautious capital-preserving approach. With the requirements for capital increase in the banks, well, they would have to look at how some of these investors who they want to pay these big monies will try and put some of those monies back into the banks towards meeting their capital requirements as set out by CBN. Let's break it down. Manufacturing giants rewarding big. Dangote Cement paid out 99.87 of its profit as dividend. 30 naira per share, 502.6 billion naira paid out to its investors and shareholders. This is something that it does a lot for those investors and those shareholders. 30 naira. So if you have 1 million shares, for instance, that means you'll be getting 30 million naira coming to you from Dangote Cement. Wow, 30 million is a lot of money now. I wish I had 1 million shares in Dangote Cement. I'll be 30 million naira richer. Boa Cement wasn't far behind, returning 93.93% of its profit as dividend. Boa Foods paid out 88% of its after-tax profit with a dividend of 13 naira per share. Why don't I just have 1 million shares in all these places? I know I'll probably be hitting the 100 million naira mark by the time I get my dividends. Gerugu followed with a 77.35 payout ratio, offering 8 naira 50 kobo per share. And African Prudential PLC paid out 68.39, offering a dividend yield of 5.9%, even as its stock price declined. What were the observations with regards to this? Companies showed a strong commitment to shareholders, though questions linger about long-term reinvestment and growth strategies. With the current state of the economy, as you can see, like I said, manufacturing hasn't been in this space for a number of years, but they are getting dividends out to their shareholders, and I guess their shareholders will be waiting for that annual general meeting so that they can thank the companies. But we also need to remember that the economy is beginning to come out of, beginning to go again. So what are the growth strategies and long-term reinvestments of these companies? Are they looking, if they're paying out all their profits this year, are they looking to get shareholders to buy new stocks to increase their capital towards increasing their growth and reinvesting some of these monies? What are the growth strategies? Once we get them at Nairametrics, we'll start to let you know. On this show, Follow the Money, and on every other show on Nairametrics TV and our websites, when we provide you the news as it comes out hot and smoking. The banks have stayed conservative. Remember what we said, banking capital increase 2026 is the deadline. It seems so far away, but yet so close. So Fidelity Bank tops the sector with a 32.35% ratio. Payout ratio. Fidelity has been doing great things this year. All through. Although people consider them as a tier 2 bank, I guess what they're trying to do, or what they're pushing forward to, is to become one of the tier 1 banks. Maybe, who just knows? Maybe we will now have another F in the Nairametrics Fugas, as at the rate Fidelity is going. Who knows, maybe by the end of capital increase, we would have a Fugas F. Let's see how it goes. You never know. GTCO, UBA, and Zenith maintain lower payout ratios, focusing on financial stability amid economic headwinds. I spoke about the economic headwinds now. Inflation, though, has tapered down to the 20s, has went up a bit in March, with the last inflation data that has been released. And as such, banks are also focusing on how they are going to raise 500 billion, 200 billion in capital, in line with the CBN capital increase policy. But despite this modest payout ratio, bank dividend yields remain attractive, between 3% and 16%, which is great value for shareholders. As you know, any company who is paying out dividend in these challenging economic times and difficult terrains of doing business, they're doing a lot to make shareholders not just happy, but to bring back that money towards investing in the company. So what are the takeaways? Banks are balancing dividends with capital retention for future resilience. We've said that if you're going to hit the 500 billion capital 500 billion naira capital requirement and expand into new areas of business and help the economy grow by giving out strategic loans and partnerships from the banks towards growing that economy to the $1 trillion mark as expected by the president. Then you need to balance out the fact that you don't pay out so much money so that you can retain a significant part of it towards cushioning the effects of the future. So what are the final thoughts here? Manufacturers are rewarding shareholders heavily, showing strong cash flows and financial strength. Meanwhile, banks are adopting a prudent strategy, safeguarding their balance sheet. So for investors, those seeking high immediate income might favor manufacturers, as they've started paying out huge dividends. Those eyeing steady long-term growth should lean towards the banking stocks. Either way, Nigerian companies are signaling resilience and a shareholder-first mindset in 2024, even amid economic turbulence. Banks made trillions in 2024, but get who took the bigger share. So on this segment, we want to quickly look at how much the banks posted in terms of combined profits after tax. 4.79 trillion, up 53.34% from 2023 financial year. But the real story lies in their value-added statement, which showed a growth of 8.87 trillion of new wealth created. And who are the beneficiaries of this? Government tax, 1.166 trillion, plus 111% year on year. So you can see how much the government raked in from banks in 2024. Once they carry out the tax audits, how much the expectations are. 1.166 trillion is the minimum that the government is looking to collect from banks and the profits that were made during the year. Shareholders, dividends paid to shareholders was 951.4 billion, 87% year on year, and government collected more than the shareholders by over 200 billion. Yes, because government needs that money towards resuscitating the economy and creating new infrastructure towards growth. We've seen this administration tell Nigerians with the tax committee led by Taiwo Yedele on the need for Nigerians to diversify its earning and get more taxes, both from the organized and the not so organized sectors of the economy. How banks distributed this well. Zenith Bank, government got 294 billion, shareholders got 197 billion. GTCO, government 248 billion, shareholders 233 billion. Access Holding, government 225 billion, shareholders 125 billion. First Holdco, government 133 billion, shareholders 25 billion. Fidelity, wow, I said Fidelity has been doing some great things. 95 billion and shareholders 90 billion. Stanbic IBTC's employees receive more than both government and shareholders, meaning that they want their people to ensure that they keep that sustainability going. UBA shareholders fared better, receiving 171 billion versus government's 37 billion. And Wema Bank shareholders also edged out the government on returns. So final take on this part. Those shareholders have enjoyed bumper dividends. The Nigerian government emerged the biggest winner from banks 2024 success. Higher taxes, bigger coffers, and a new chapter in how value from banking boom is being shared. Let's look at the cement giants who have released their first quarter earnings. Lafarge Africa delivers blockbuster to Q1 2025 results. Posted a jaw-dropping 73.1 billion pre-tax profit for Q1 2025. That's a 739.47% surge from the same period last year. What are their key numbers? Revenue went up 80.26% to 248.3 billion. Gross profit went up 87.34% to 122.9 billion. Operating profit 137% year on year to 71.6 billion, and pre-tax profit 739% year on year to 73.1 billion. Cement sales led the way, contributing over 242 billion to their revenue. It means more and more infrastructure development is going on. Whether you're building houses, you're building roads, you need that cement. And I think that sector over the next few years will be very, very strategic in its growth as the government focuses a lot on its infrastructure development and creating new opportunities for businesses to carry out and expand on their strategies. Cost and margins, cost of sales though rose by 74%, but profit margins expanded strongly. Selling and distribution admin expenses grew, but didn't dent core operating profits significantly. On the balance sheet, their total assets went to 914.7 billion, while their retained earnings grew 15% year on year to 364.2 billion. On their stock update, Lafarge shares were priced at 79.2 billion as of April 24, 2025. In 2024, the stock recorded a 122% year-to-date gain. So what will be the final take here? Massive revenue growth and record profits show strong market demand and efficient cost management despite inflationary pressures. The cement giant is starting 2025 with serious momentum. Boa Cement reported a jaw-dropping 368.58% surge in pre-tax profit for Q1, hitting 99.7 billion, more than its entire 2024 full-year profit. I said prefect. Gross revenue rose 80.49% to 90.8 billion. Gross profit 207%, 138.45 billion. Operating profit 119.03%, 256% increase. 119.03 billion, sorry. Net profit in 1.12 billion, 351% increase. And basic earnings per share, 2 naira 39 kobo, 346% increase. Revenue soared while costs rose slower, boosting margins. Foreign exchange losses dropped sharply from 10 billion last year to 837 million this quarter, meaning that more and more organizations are beginning to see the effects of some stability in the exchange rate market and are looking for alternatives that would help them drop the cost of purchases in FX significantly. Operating profit margin improved by 40.4%, showing strong operational leverage. The balance sheet rose to 1.58 trillion and shareholders' equity climbed to 469.7 billion. On their shares, share price is down 10% year to date, closing 83 naira 70 kobo on April 24. Boa Cement shows serious strength. The stock market isn't cheering yet. If the company keeps this momentum, it could be one of the biggest stories of 2025. Let's wait and see how that goes. Finally and quickly, Dangote Cement passed through Q1 with huge profit growth. Posted a powerful 87.48% year-on-year surge in pre-tax profit to 311.97 billion. Revenue 21.69%. When you compare that to Boa, it didn't grow that much. 994.66 billion. Profit 40.13%. That's gross profit to 587.39 billion. Operating profit 55.67%. That's to 397.42 billion. Profit after tax 209.25%, meaning that they managed their admin expenses much better. It grew its 5.71%, and their basic EPN rose in comparison to Boa by 84% to 12 naira 29 kobo. So revenue grew despite production and sales volume falling slightly. Nigerian operations only now contributes nearly 70% of total group revenue. We know how much infrastructure development that is going on in Nigeria, so I guess that's where that is coming from. Gross margin improved sharply to 59%, helped by slower cost growth. FX losses dropped significantly, supporting bottom line strength. The balance sheet, total asset rose modestly to 6.445 trillion, and debt reliance reduced as leverage ratio improved from 2.19x to 2.71x. What is the stock update? 2024 delivered 49.67 year-to-date gain. In 2025 so far, the stock is down 9.77, closing at 432 naira. A dividend of 30 naira per share was declared payable in June, offering a solid 6.94% yield. What's my final take? Dangote Cement Q1 2025 numbers show operational efficiency and strong market dominance. Despite stock price weakness, fundamentals remain solid, and the dividend is a major attraction. Remember, Nairametrics, creating wealth through information. That's been the show. My name is Wadi, and Ugo will be back soon. Bye for now.